Hello, this is Sean Polston with TucsonShortSaleNegotiator.com. Today is July 19th, 2011, and I have a special guest here with me today, Mr. Tom Heath. Tom's here because Tom happens to be an expert in the mortgage industry. He's got 12 years of experience with mortgages. One of the most common questions that I run into from people who are considering a short sale is, what is my time frame? What does it look like for me getting back into the market, being able to requalify for a mortgage? And I hear all kinds of different information on this depending on where you go. So what I thought would be best for you guys, and you know, some of you are considering short sales, some of you might find yourself here because you did a short sale in the past and you're looking at re-entering the market. What I thought was best for you is to bring somebody like Tom here to answer these questions for us and address this subject. And let me stress again that today's July 19th, 2011, because the mortgage business is an ever-changing animal. So depending on when you're viewing this video, things may have changed. So one of the best things for you to do if you're considering getting a mortgage is to talk to somebody like Tom who can answer these questions directly. So Tom, why don't you take it away?
Well, I appreciate you being here. I appreciate you asking me to be here, and I look forward to hopefully clarifying some of your questions. And I'm going to start this just by prefacing that every situation is unique, and we're going to talk today about general guidelines. Every situation, however, might have extenuating circumstances. So if you find yourself in this position, definitely talk to a lender, talk to someone like Sean who'll get you in the right hands, and move forward for yourself, not just under the guidelines. Don't think this is going to keep you from getting anything done, or that you're guaranteed a loan if you fall within this criteria. One of the questions that we first talked about was the difference between a short sale and a foreclosure, and they do have different impacts on your credit and how lenders view you. In a foreclosure situation, you've given the property back. The lender has written off that note, and they are no longer going to collect from you. It may be voluntary, it may be involuntary, but at some point you stop making your payments. In a short sale situation, it's an agreement between you as the owner of the property and the bank as the financer of the property that you are released from your obligations, in most cases, from that responsibility, and the bank will take less than they agreed to when they gave you that loan. So there's a mutual consent in the short sale process, whereas in the foreclosure process it may be more involuntary because you did not make your payments. A big difference, and they both will impact your credit to varying degrees.
Okay. As far as somebody looking to, let's say we have two borrowers, you know, one went through a foreclosure, one went through a short sale. What are their time frames, generally speaking, what do their time frames look like to get back into the housing market and take advantage of the low rates and that kind of stuff we have to offer today?
Well, there's two types of financing that are predominant right now. There's conventional financing, which are loans that typically are purchased by Fannie Mae. They're what you think of as normal loans. If you put 20% down, you don't have mortgage insurance. It's what we consider a conventional loan. Then you have another product called an FHA loan, in which the buyer can put as little as 3.5% down, and they purchase an insurance policy from the federal government that helps to protect the lender in case of default. And they have different criteria. So conventional and FHA are the two predominant loan types out there. Conventional is harsher when it comes to both of these criteria. On a foreclosure, for example, a conventional loan will say that you need to have about 7 years break between the foreclosure and really being fully qualified for another conventional loan. Now there are some steps in between there. There's a 4-year period in which you could be eligible, but you would have limited criteria under which you could apply. The FHA product allows for foreclosure and short sales right after a 3-year period.
Okay.
So they're a little bit more lenient than the conventional side.
What about conventional? I know we said 7 years for foreclosure. What about a conventional loan and a short sale? What are we looking at there?
On a short sale, 4 years really could be the the defining point. 2 years, there is some eligibility, but there has to be significant extenuating circumstances. Those are hard to document, but they are out there. So you could be 2 years out on a short sale and possibly get into a conventional loan. 4 years is a more realistic time frame on that. And again, the farther you get from that, the easier it's going to be to qualify for full financing.
Gotcha. Okay. Are there, it's my humble understanding that there are some products out there, if somebody's completed a short sale and they've had extenuating circumstances where the lender has agreed to do a short sale in a situation where they haven't missed any payments, they've been current, and that in the case of a short sale, there may be availability of financing now.
Absolutely. I think that's one thing that's misunderstood in the market. Just because you're going through a short sale does not exclude you from financing right away. If you're getting a loan insured but with FHA insurance, you could theoretically get a mortgage immediately after a short sale. And you hit on a key point. You have to be current at the time. And the other key point, there have to be extenuating circumstances. They can be tough to document. We went through one recently, however, where a gentleman was living on the outskirts of town. He is a veteran. He goes to the VA for medical care, and his condition got to the point where the travel from where he lived to the VA was becoming really a health risk for him. And so he negotiated with his bank for a short sale, kept his payments up, and he completed that and was able to purchase a home very close to the VA. It was something the underwriters looked at as circumstances that made sense. What they're trying to prevent are people that are just taking advantage of the marketplace and short selling and getting into the same house down the street. The circumstances are there and they can be documented. It is more of a challenge. There is quite a bit of paperwork. Those of us doing it the right way sometimes pay the price for those that have done it the wrong way.
Sure.
But it definitely is an option for people that they should be considering.
Thank you. One of the interesting things I run into, and I have to kind of be careful here, I run into a lot of people are they're in a really tough spot, and they're looking at short sale, foreclosure versus bankruptcy. And what is interesting to me is I run into a lot of people that have talked with a bankruptcy attorney, and the bankruptcy attorney advice has been file bankruptcy, let the house go to foreclosure. And I'm not saying that, and I would imagine in certain circumstances that's probably that individuals, depending on their scenario, that may be their best option.
Mm-hmm.
But what is interesting to me is that it seems to me that the bankruptcy attorneys in a lot of cases are conditioned to believe bankruptcy is the worst possible thing, and also that in a lot of cases the general public has been conditioned that bankruptcy is the worst possible thing. And one of the things that's really scary to me is most of the time when I talk to these people and they've gotten that advice from the bankruptcy attorney, there's been little content to the effect of this is why, or this is how this is going to affect you, or this type of thing. And again, I think it gets back to that conditioning. And if you can touch on for us what happens when somebody goes through a bankruptcy and lets a house go to foreclosure. Is there ever a scenario where letting a house go to foreclosure is better than completing a short sale, or possibly somebody who could complete a short sale and then maybe they're looking at filing bankruptcy down the road? Is there ever a situation from lending purposes? Because part of my thinking is that the bankruptcy attorneys have gotten conditioned that bankruptcy is the worst possible thing, and nobody over on that end of things has bothered to actually run it by the people who loan money as to what is the worst possible thing that can happen to your credit as far as going out and getting a new mortgage later on down the road.
Well, I recently had the privilege of sitting in front of a group of attorneys discussing this. It was a group of family attorneys and bankruptcy attorneys. I was on a panel discussing some of the effects of those decisions in the long term. And I think in general there was an awareness that there is a differentiation between what might be best for the clients' immediate needs and their long-term needs. And the group that was there, we talked quite a bit about delving a little bit deeper into what is going to happen next for them. And do they need to start talking to a lender now about their future steps? Because there definitely is a clear line between the foreclosures and the bankruptcy. Bankruptcies, from a lending perspective, are typically looked at less harshly. You can be ready for a house within 2 years of the discharge date of some types of bankruptcy, 4 years with others. There are, of course, other requirements that you rebuild your credit and follow the rules of the bankruptcy courts, but you can be available right away. Now, if you put the house into that bankruptcy, you've now turned into what looks like a foreclosure situation, and the harsher penalty would be that foreclosure. And so what could have been a 2-year situation on the bankruptcy, because now you've included the house, could push it out to 7 years on a conventional loan. Again, it might be, as you said, the right choice for that client. Just have that clear conversation, I think, with your attorney as far as what your end game is. If you want to be back into a house sooner than later, and see if there's a way to work through that. And I think this whole tsunami of events that's happened in the last 5 years has caught every profession slightly off guard. And over the last 5 years, I think every profession has done a great job of coming back to an understanding of what really is best long term for the consumer, and that involves a conversation with multiple disciplines, whether it's the attorney and the real estate agent, or the attorney and the lender, who is clearly understanding where they want to go, and making sure that everyone is on the same page, and then making the phone calls.
Great. Now, and that's the situation where we include the house in the bankruptcy. Let's look at it where the house isn't included in the bankruptcy. The people go through the bankruptcy, and the attorney said, "Oh, we'll just let the house go." What is that does that have a double impact on the people's credit? Do they have the bankruptcy and then now a foreclosure too down the road when the bank gets around to foreclosing on the house? Because sometimes that happens 6-8 months. I mean, I have a situation, today where I have somebody who's in a home, they haven't made a mortgage payment for 16 months, and the bank hasn't even begun foreclosing.
Yeah, there are definite guidelines for multiple events, and the exclusionary period has become the penalties, if you will, have become harsher. So if you start to have multiple events, from an underwriter's perspective, they might not adhere to the 2 or 4 year rule for a bankruptcy, because you've had multiple events. They might push it out for 5 or more, because you're showing a pattern of instability. If they stem from the same event, you're probably looking at the harsher of the two. So in your scenario, when the bankruptcy is done, probably has little impact as to when you're available for financing, as would the foreclosure, the date of that, when it gets filed, and then the necessary waiting period. So that can certainly lengthen the amount of time that you're excluded from getting financing. And then again, these things, when you start to talk about those scenarios, they get very specific, and underwriters are going to really dig through that situation to see what makes the most sense. Is this a single incident that just sort of carried on? Is this a repeated incident that shows multiple situations of a buyer getting into trouble, which then of course would be a higher credit risk.
So the long and the short of, and there's a lot of my videos that the answers I give in the video are, it depends. And so it really sounds to me like the long and the short of, what's my scenario going to be once I get through a short sale, is that it depends. It depends on their situation. Let me ask you, anybody who comes to my site that's, considering doing a short sale, and, would you be there to consult with them and just have a discussion with them about how things look in the future for them, what it looks like in their scenario as to what's going to happen in the future for them?
I've made a living over the last 12 years of working with people and helping them understand the lending perspective to their situation. And as long as people understand, I'm not advising them to or not do anything. That's for the professionals like yourself and for their attorneys. I can tell them how it will look if they make that decision one way or the other. And the other thing that I think is a critical component of this is, if you have gone through that situation and you're thinking in the future you want to purchase, don't wait for 4 years to start getting engaged. Start asking the questions now. find a lender, talk to a lender, find an agent, talk to an agent, and get the idea of what you want to do in a time frame. Because as you mentioned at the very beginning, this is a very fluid situation. And my anticipation is in the next couple of years, we will probably see the market open up to some people that have gone through isolated incidents like this. There's no guarantees. That seems to be the trends that I would anticipate seeing. So don't wait. If you're interested, get the information now. There's no harm in that. I don't know. I don't think you charge for talking to someone,
No.
and I don't. So it's just a matter of getting the right information in their hands and letting them make that decision when they're ready.
Okay. Tom, I really appreciate you being here with us today. I know that you're going to have some other questions, and on my website you're going to find other videos to answer your questions. Don't hesitate to click on my short sale request form. If you're a buyer and maybe you wound up here because you did go through a short sale a year ago, 2 years ago, 3 years ago, foreclosure, bankruptcy, any of those things, I'd like to touch on, although this site, most of the content or vast majority of the content on this site is designed for short sale sellers, I'd like to touch on that we do have an entire buyer division on my team. We do a tremendous buyer business, and we partner with people like Tom to help us understand these situations and help put you in the best possible buying position later on. I thank you for visiting the site today, and if you have any other questions, again, do not hesitate to pick up the phone and give me a call. Just fill out my short sale request form, and I hope you're having a great day. Thank you.